Hello investors and traders. Today I'll speak about the inflation, the CPI. Today it was the new data released by US, the inflation in US. So we can see that the current inflation rate is 6.4. The previous was 6.5. We can see it here in the chart. Of course, since April 22 it's decreasing, but still it elevated more than 6%, and the expected the forecast figure was 6.2, so still more than 6%. It's I guess it's a lot. The annual inflation rate in US slowed only slightly to 6.4 in January 23 from 6.5 in December, less than the market forecast. Still, it's the lowest reading since October 21, with energy prices rising more than 8%, while food cost went up more than 10%. Oh my gosh. Compared to the previous months, the CPI went up 0.5% in line with market forecast, with the shelter cost accounting for nearly half of the increase. Although inflation has shown signs of peaking at 9% in June last year, it remains more than 3 times above the Fed 2% target and continues to point to a broad-based advance on a general price level, particularly services and housing. So we still see that the inflation in US is elevated. It's more than 6%. Let's have a look the reaction of the market. So we see that S&P 500 in the SP is now trading. The future is trading in a negative territory, and the Nasdaq also is becoming negative. Not so strong report. The B2C, the Bitcoin about 2200, and the US oil price, we see that 85%. The VIX, the volatility index, is now minus 4%. So the volatility is decreasing, but of course we'll check how it will continue to trade today. And the TLT, the US bond ETF, we see it's rising about 1%. Such high inflation, I think that it of course would lead to the Fed continuing hiking interest rate. Now the Fed fund rate is 4.75. I think the next on the next meeting they may increase it to 5, maybe 5 and 0.25. So here we see that the inflation rate is 6.4. Of course it's decreasing. The peak was more than 9%, but now it's only 6.4. But still, if the target rate is 2 for the inflation, now it's 6.4, so it's a lot. I guess it's a lot. The Fed, I think, may continue to increase interest rates. Let's have a look on this chart. So here we have the expectations for income growth falter. US consumers see income growth cooling to 3.3%, down from 4.6%. And of course the percentage point change in 1 year ahead household income growth expectations. So the salaries, the wages are expected to show a decreasement. Here it was a positive. Now we are in a negative territory. Of course, it's good for the companies, for the stocks, but still, it's still. I think that the income growth expectation continue to be elevated. Let's move to the market, to the indexes. So now we see that the S&P 500 and Nasdaq in a negative territory. Both of them are red. The inflation is still continuing to be elevated, and of course the Fed, the US Fed Reserve, may continue to its interest rate, Fed fund hiking, and I think that on the next meeting its key rate can be 5%, maybe a little bit higher. So still the inflation here continue to be an issue. So it's live, it's online, it's updated. Last update updated information about last figure about the US inflation. So of course, if you're interested in investing in the stock market, don't forget to subscribe to my channel, and of course see you the next time. So for today the inflation is the K figure here, the K number is 6.4. So the previous was 6.5, so 6.4%. So thank you for watching and see you on the next time.